Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of corporate finance and try to predict future market movements with a smirk. But this time, well, let's just say someone got a nice little cash injection and we're here to find out all about it. Today, we are diving deep into a very interesting filing from Profound Medical Corp. This is a report that tells us about some pretty significant recent events, specifically how they are raising a good chunk of money. So what exactly is this company doing? Profound Medical Corp is basically telling the world they've made a deal to sell more of their company's stock to raise money. Think of it like a company selling pieces of itself to investors to get the cash it needs to grow or operate. And this isn't just any small deal. They are planning to sell a lot of shares, and they are doing it in a way that is public and announced. This company is already publicly traded on the Nasdaq, so they are familiar with the market and the rules. The big news here is that on the 19th of December of last year, Profound Medical Corp announced they entered into a securities purchase agreement. Basically, they agreed to sell a whole bunch of their common shares to certain investors. Let's break this down. They are selling over 5.1 million shares of their stock at $7 each. This is going to bring them a massive $36 million in cash before they pay any fees. That is a significant amount of money for any company, and it shows they need this capital for something specific. So where is all this money going? They're planning to use it for a few key areas. They want to expand their sales and marketing efforts, which means they're looking to get their products or services out to more customers. They also need working capital, which is the money needed for day-to-day operations, like paying bills and salaries. A good chunk is also earmarked for research and development, meaning they are investing in new ideas or improving existing ones. Finally, they mention strategic transactions, which could mean buying other companies or making big partnerships, and general corporate purposes, which is a catch-all for other needs. This whole offering was done through a proper process. They filed a registration statement with the Securities and Exchange Commission, or SEC, and it was approved before they could sell the shares. This means they followed all the necessary steps to make sure the sale was legal and transparent. Now, the agreement itself, the purchase agreement, is pretty standard for these types of deals. It includes all the usual promises and protections for both the company and the investors. They also agreed to some restrictions on selling more shares for a while after this deal closes, which is typical to prevent too much stock from flooding the market all at once. To make this big sale happen, they hired a company called Koenig Capital Partners to act as their placement agent. Think of them as the sales team for this stock offering. For their work, Koenig Capital Partners will get a fee of 5.0% of the total money raised. So out of that $36 million, 5% goes to the agent. They also agreed to cover the agent's expenses, including legal fees up to $100,000. This is all normal stuff in corporate finance. But wait, there is more. Profound Medical Corp isn't stopping at just the one deal. They are also planning a private placement. This means they will sell another batch of shares, up to about 571,000 more, at the same price of $7 per S-share. This private deal could bring in an additional $4 million. These private placement shares will have a lockup period, meaning the investors can't sell them right away. They have to hold on to them for over 4 months. This is a way to prevent immediate selling pressure on the stock. It is important to note that these private placement shares are not registered under the main securities law, the Securities Act, so they can't be easily sold to just anyone in the US unless specific rules are followed. This is a common practice for raising capital from certain types of investors, particularly those outside the primary public market. To make sure everything is on the up and up legally, they also have an opinion from a law firm, Mintz LLP, confirming that the issuance and sale of these shares are legal. This is a standard piece of documentation to build investor confidence. Moving on, under another section, they also mention an earlier event on the same day. This confirms they publicly announced the details of this stock sale, so it was not done in secret. They issued a press release to let everyone know how much money they were raising and at what price. And finally, the report is signed off by the Chief Financial Officer, Rash Dewan, on the 19th of December 2025. This signifies the company's official acknowledgement of this filing. Now, looking at the big picture here, Profound Medical Corp is actively seeking capital. Raising $36 million in a registered direct offering plus potentially another $4 million through a private placement is a strong signal that they believe there are significant growth opportunities ahead that require substantial investment. Their stated use of funds expanding sales and marketing, R&D, and strategic transactions suggests a strategy focused on aggressive expansion and innovation. From a Warren Buffett style perspective, this move could be seen in two ways. On one hand, it is positive that the company has access to capital and a clear plan for its use, which could fuel future growth and profitability. It shows confidence from investors who are willing to buy into their vision. On the other hand, issuing more shares can dilute the ownership stake of existing shareholders. If the company doesn't use this new capital effectively to generate significant returns, the value per share could decrease in the long run. The key will be how well they execute their expansion plans and if the investments in R&D lead to successful new products or market penetration. The risks here are always present when a company is heavily investing for growth. They could overspend, R&D projects might not pan out, or market conditions could change unexpectedly. However, the fact that they are using a registered direct offering means they've met regulatory scrutiny, and the private placement with its hold period suggests a more targeted, less disruptive approach to raising the additional funds. In conclusion, Profound Medical Corp is embarking on an aggressive growth phase by securing significant funding. This is a calculated move that hinges on their ability to execute their strategic plans effectively. For investors, it might mean opportunities for upside if the company's growth strategy succeeds, but also the inherent risks associated with rapid expansion and share dilution. It will be crucial to monitor their progress in sales, R&D breakthroughs, and any strategic partnerships they forge in the coming quarters to see if this capital infusion indeed translates into long-term value. Alright, that is our breakdown of Profound Medical Corp's latest filing. What is your take on these fundraising efforts and what they signal for the company's future? Are you excited about their growth plans, or do you see potential pitfalls? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate financial reports. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, and we will see you next time on Corporate Decoder.